Hello traders and welcome to another video review. Today is Wednesday, April 16th, 2025. Let's take a look what do we have in the economic calendar for today. Overnight data were quite interesting because we got data from China, plenty of data from China. GDP in China beats the expectations of 5.2%, 5.4 was the actual number. Fixed asset investment is up from 4.1% to 4.2%. Year to date, Chinese GDP is 5.4%. Industrial production up from 5.9% to 7.7%. Up to date is 6.9% already. Unemployment rate down from 5.4% to 5.2%. So very good data from China. Data from the UK in form of the CPI lower than expected. The previous number was 2.8, market forecast was 2.7, the actual number is 2.6%. We are looking for the CPI data from the Eurozone. Those data are scheduled for release at 11 o'clock. Core retail sales and retail sales data from the US are scheduled for release at 2:30. Then we got the industrial production data from the US scheduled for release at 3:15. And then the major event of today, Bank of Canada interest rate decision will take place at 4 o'clock. Together with the interest rate decision, we will have the monetary policy report and rate statement. The press conference will start at 4:30. Please notice that Bank of Canada interest rate decision is a very important event, and the market participants expect the interest rate to stay at the same level of 2.75% basically. Business inventories and retail retail inventories excluding auto from the US are scheduled for release at 4 o'clock, and then we have the Cushing crude oil inventories and Cushing crude oil inventories scheduled for release at 4:30. 5 o'clock global daily trade price index. Atlanta Fed GDP now is scheduled for release at 7. Then we have trade balance from the New Zealand, and at 7:15 Fed chair Jerome Powell will give a speech. So pretty busy day. Interest rate decision data from China. Let's see how this impacted the markets, and we will start with euro dollar. The 4-hour chart of the euro dollar is showing us the wave 4 in progress as we speak. We bounced from the technical support at 1.1277. So everything is going on as expected. We are still locked between those two levels here, the swing high and the technical resistance located at 1.1474 and the technical support at 1.1277. So the market goes up and down, just as it is typical for the wave 4, but we should be prepared for the movement to the upside to complete the wave 5 of the wave 5, and then bigger correction should come. So we stick with our plan. Because of the data from the UK, let's take a look at the British pound. The same situation can be observed here. We got the breakout above the last swing high located at 1.3206. So this level will now act as the technical support, and as you can see, the market tested this situation already. The market made very nice reversal, V-shaped reversal, which is a bearish which is a bullish indicator, obviously, and with this kind of a momentum, it looks like the market is starting to trend up towards, obviously, 1.3435. Right now we are testing the upper channel line above the technical resistance. If we zoom out, we can see that this market looks very solid. There is a, let me just zoom out a little bit. Oh, there you go. There is a sequence of the higher highs, higher lows, very nice, let's say, and a very aggressive and steep correction to the downside. However, we are back above this level. We are back above the swing high. We are back above the 100 periods moving average. Strong momentum. Up is the way uptrend should be continued. US dollar to the Canadian dollar ahead of the interest rate decision. Let me just take a look here on the 4-hour time frame chart. As we said yesterday, the market hit the target, the Fibonacci target. It was much more visible at the daily time frame chart, so we hit this target. We got very nice reversal pattern here at the end of this movement to the upside. So currently the situation looks like this from the Elliott wave perspective, right? So let me just give you the clue about the situation here. We got wave A, we got possibly the wave B, or maybe some sort of the deeper collection here. So, and then there's wave C. Okay, so the wave B might be completed here because that might look like some complex correction. Nevertheless, the point is that the movement here is in 3 ways so far. And now there's some sort of the let's say nice bounce from the projected target Fibonacci level, projected target of the 100% of the wave A, bounce from the extremely oversold conditions, bounce from the technical support. So we should see now the bounce, the pullback higher towards the level of 1.4 or even higher. On the US dollar to the Canadian dollar, please notice the fact that the Bank of Canada is about to make an interest rate decision. So this point of view, the technical point of view, might be a little disturbed by the fundamental triggers like interest rate decision, which is very, very, of course, important. Right, so that was the US dollar to the Canadian dollar because of the data from the crude oil. Let's take a look at the crude oil market, and it looks like, let me just 78.2. Let me just find out if yes, obviously that was not correct. This is the crude oil market current situation. If we place our Fibonacci retracement, obviously we have to do it the other way around. So if we place it here, you can see that we retraced like almost like a 50% of the last swing down, and so far the market is still unable to move higher. If we place our technical resistance line somewhere here around 65.22, let me just mark it as a red. This is the level that should act as the very strong resistance. So only if we break above this level, the upward movement can be continued. Obviously, we still got the 50% Fibonacci level to be hit precisely, 63.76. We got 68% Fibonacci retracement at 68.85. However, for now, the crude oil market doesn't actually looks like it wants to go anywhere near this levels. It stays in a some sort of the range between the swing low at 55.21 and the technical resistance 65.25. We will see what will happen next. And obviously we need to take a look at the Bitcoin, and the Bitcoin was rejected from the $86,097. Again, bearish engulfing pattern. We got some sort of the kind of a harami movement here back to the daily range at 82,992. Now this daily range looks like it's about to be tested. All right, so please notice that if we break out of the daily range and test the 100 periods moving average, test the trend line, and this level here, that support right now 81,231, right, those levels are very susceptible for a test. But if we break below those levels, especially below the last one, this one here, momentum is negative straight on, and we might go as low as the level of 30 on the momentum, and we might go as low as the swing low here at 74,460 again because of the failed breakout above the trend line made by the bulls. So please keep an eye on the Bitcoin. Very, very nice range here, very important situation here on the Bitcoin as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.